Did you know you can pay off your 30-year mortgage early? Yes, that's right. Just because you have a 30-year mortgage doesn't mean you have to take that long to pay it off. Some of you may want to pay off your mortgage to become debt-free, or you may want to cut down on the total interest you pay on your loan, or maybe you're just looking to retire and you want to increase your cash flow. I'm going to go over 5 ways to pay off your mortgage early. Watch this video until the end. I think the last 2 ways will surprise you. And please click that like button. Before I get into strategies for paying off your mortgage, let's look at an example. I like using bankrate.com to do mortgage calculations. Let's say you bought a home this month for $550,000, which is the median home price in Sacramento right now. And you have a 30-year mortgage with a 4.25 interest rate with 5% down. Your principal and interest payment is a little over $2,500. This is before adding in any taxes and insurance. As you can see, it takes you 30 years to pay off the mortgage. You would be paying a little over $400,000 in interest. You're paying more towards the interest for the first 15 years of your payment than you are towards the principal, which is the balance. In years 16 through 30, you'll be paying off more of the principal than the interest. This is an amortization schedule. Mortgage amortization is the term lenders use for the payment process of your mortgage. Okay, hopefully that makes sense. Now let's look at ways you can pay off your mortgage early. The first way is to make extra principal payments. Let's play with the mortgage calculator again and see what happens if you pay an extra $200 a month. As you can see, you'll pay off your mortgage 4 years earlier. Of course, check with your loan servicing company to make sure there's no prepayment penalties. Another way to make an extra payment is by splitting your mortgage into bi-weekly payments, which is every other week. By doing this, you'll end up making an extra payment a year. Let's go back to our example. You'd make a payment of $1,285 every 2 weeks for a total of 22 weeks. So you'd be paying $33,410 versus $30,840. You'll need to make sure that extra payment is being applied to the loan principal and not towards the interest. Making extra payments also helps to build equity faster. And if you're paying private mortgage insurance, which most buyers will do if they put less than a 20% down payment, then you may be able to have the insurance removed once you have a loan-to-value balance of 80%, which means either you pay down the balance by 20% or your equity increased by 20%, or a combination of both. Again, check with your lender to see if this is an option. Like number 1, number 2 is making extra payments, but one time versus every month. This is a lump sum payment. You don't have to stick to a regular schedule for extra payments. If you get a tax refund, come into some cash from your favorite uncle, put that towards the mortgage principal. Any month you have extra funds to put towards your loan, you can make an extra payment to help pay off your mortgage early. Okay, the third way to pay off your mortgage early is refinancing it. If you can get a lower interest rate or shorten the term to 15 or 20 years, this may make sense for you. However, there are fees for refinancing, so check to see if the savings outweigh the costs. And the payment may be higher, so make sure the payment fits your budget. Use a mortgage calculator to compare payments and total interest between 30, 20, 15, and even 10-year mortgages. Number 4 is recast your loan. Recasting is when a lender recalculates the monthly payments on your current loan based on the outstanding balance and the remaining time that you owe. If you've been making extra payments or large lump sum payments, you can request for the loan to be recast to a lower payment. It doesn't change the interest rate or term though, but it can lower your monthly payment. Combine that with making more than the minimum payment and you can pay your loan off quicker. Again, check with your lender to see if they offer this. Here's another idea for using recasting. Let's say you currently have a home, but you found your dream home and you weren't quite ready to sell the first home in time to purchase the new home. If you have enough for a down payment without selling and can qualify for both, you go ahead and purchase the new home. Then you sell the first home. Now you can take the proceeds and make a lump sum payment on the new home and ask your lender to recast your loan. Okay, This next one might surprise you. Number 5, rent out extra space in your house. Let's say you don't have anything extra at the end of the month. Consider renting out a room or an accessory dwelling unit, also known as an ADU. Then put the rent towards extra payments or lump sum payments towards your mortgage. Don't want a long-term tenant? Well, maybe renting to a visiting doctor or nurse who typically rent 3 to 4 months at a time. They often receive living allowances to fill temporary positions at local hospitals. And more cities are allowing short-term vacation rentals called STVRs, or just short-term rentals, STRs, that are 60 days or less. Have a garage that you don't use? Consider renting it out as storage. Have a unique property, ranch, or backyard oasis? Consider renting it out to someone for an event, like a wedding. Be creative, but check local laws, then put that extra rent towards your mortgage payment. Did some of these ways to pay off your mortgage early surprise you? I bet now that you got that brain thinking of ideas, maybe you'll come up with other ways to pay off your mortgage early. If you found other ways to pay off your mortgage that I didn't mention, please share. Maybe you're thinking about moving to a smaller home or a larger home. You can use some of these techniques with a purchase too. Contact me for your free consultation and let's explore together. If you found this video helpful, please subscribe to my channel and remember to hit that notification button so you'll be the first to get my videos. This is Kimberly with Guide Real Estate.